All right. Data is out. Good morning, good afternoon, good evening. It's Doc from North America. Q3 GDP pops out. They've popped the stock market up. They popped it down. They're jumping around. There's no real clarity there. Let's put up the bond. You can see beta is back up and running. Let's get the, where's it at? Right there. Let me get the chat line up there. There is Robin. Hello, Robin. So, all right, so what do we got here? Q3 GDP first read. Was it up to, where'd it go at? Okay, what's 1.8? 1.8, 2.3. Let's see, it looks, price index expecting, what is it, 1.9. And it was up 2.5. Good news, 1.8. 1.8 is lightest since 1.5 last quarter of 23. You know, you have two ways to look at it. Nice progress, but levels already, if we look at the core price index quarter over quarter, same scenario came in very low, expectations at 2.2, well below the 2.8, and the 2.2 fits in. Last quarter of 23, when it was 2.0, we see no yields hovering. Let's see, where we got now? Where's the yields? I'm seeing the 30-year yielding 4.5. The stock market made a simple little pop and backed off. And let's see, what else can we say about any of this? 2-year whisker, so yields move up. So you can see here, let's go over to the bond. Let's put the bond in there. Just look to see how they have had the bonds. They probably front run the bonds because the bond vigilantes know the game, that's for sure. There's the 30-year right there. And let's see, right there. You see it's a little bit up. You know, it's trying to push up. You can see we're in weekly sells still. Would be nice if the thing turned into a weekly buy. That would, let's see. See, if the price of the bond goes up, interest rates drop, and that's what we want. We want interest rates to drop. Remember, that's why the Fed dropped the official rate a 0.5 percentage point. They were hoping that the bond traders would join in with that. Surprise, surprise, they did not, did they? So, third quarter advanced reading is a 2.8 active versus a 3-point estimated. So it's just down a little bit, 0.2, but it's still plus, and that's a good thing. But the bonds are not the happiest things about it. They're just kind of orbiting at this point. Let's see if we can put the live bond up right there. Where is it at? And bonds were rising this morning. And yeah, they've taken them down a little bit now. Now they're down to the, still up, but by a little unchanged. Let me go show you that. Right there, let's switch screens. There it is right there. And there's the 30-year bond. You know, it was up in here before the news. And now it's pushing down a little bit. You know, there's, I've been playing around with a couple of different algos on the weekly. We can just shrink that down like that for the time being. And you can see here, we've been in the daily sell from here. And that was the daily buy right there, but we're in a weekly sell, so you're not taking any longs, that's for sure. We would like to see this go up because that means interest rates are dropping. The price of the bond, when the price of the bond goes up, interest rates are backing off. So we are, let's see, first price index, X food. See, that's another problem. The GDP is missing stuff. You know, energy, X foods, housing. That's the same thing with the inflation. Mr. Obama changed these numbers so that when we look at them, they don't show the cost of food. They don't show the cost of a mortgage. They don't show a lot of important things, fuel and energy. They don't show any of that. So the inflation number is much lower than it should be. In other words, it should be higher because everybody here knows that they're listening to this, that you walk into a store to go buy something in the last 4 years across the whole planet, everything is more expensive. You know, be it food, be it the energy you need to put in your machines or heat your home or clothing, any of these things, they're all up higher. But the official government numbers, they have it down in the twos. like 2.8 or 2.5 or 2.7, something like that. And then the core rate is touching around the 4 area, but they all walk around pretending that it's dropping because they need it to drop so they can, what, traders? Drop the interest rates again, make it cheaper for everybody. But you know what? When the official rate is one thing, they're making it cheaper for who? Not for you, not for me, but for the government. When the official rate is a fixed price like that, they don't have to increase. Like when the inflation number officially is 2.5, which it is now, what means is that they don't have to give out any more than 2.5% increases. So if it's really at 5 or 6 or 7, they're saving 65%. Same thing with the bonds. They will not pay people just because the open market says it's 5 or 4.5. Doesn't matter to them. The official rate for the federal government now is 4. So they'll just pay 4%. And, and we all know they're basically underpaying people because the inflation rate is higher, the expenses are higher, the whole game is higher. So, let's take a look at the dollar index, right? Let's do it on the beta. Let's see. I just passed it right there. And let's put it up over here. And there is the dollar index. And you can see it's been in that buy, and weekly buy. And so it doesn't want to give up. That's for sure. It's constantly saying yes, 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 not no, no, no. And a lot of people keep on looking at it and going, wait a minute, I'm a little confused here. Why isn't it going down if the Federal Reserve has lowered its interest rate? It's because in the real market, not the government market, in the real market, if it's not trading lower, it's not trading lower. And they're not going to invest as if it is. So I just think a double take on this data because I don't know if I have. I'm seeing a 1.5 on the headline PCE price index and a 2.2 on the core. Is that right? I think that's a lot below expectations. All it comes down to is they're doing their best so that they can. Remember, traders, interest rates. They're going to have a Fed meeting the day after the election, so the chances are they may lower. Let's put it this way: if they win, in other words, if the ruling party wins, then they will definitely cut it a quarter point. If the ruling party doesn't win and Trump wins, then they'll probably leave it alone. They may not lower rates another quarter. They may just say, you know what, we're going to wait and see what the numbers look like in December. And so that's why you see all this strength. They tried to put it into a sell one day there. Let me just refresh that right there. And there it is. You see it right there. On Monday, it went into a sell on, where's the 28th? 28th is right there. So we had a red dot. It was below the line. Problem was we're in a weekly buy still, so you can't go short. And then you can see the next couple of days, it rises again, even with the red dots, and it jumps across the histogram too, like right there. That's today now. Wednesday. It's showing it live there, and up to date. Let's put it that way. So we are in that situation where, interest rates are staying where they are. That's what they're doing. Matter of fact, you can see it even with the action in the euro. Let's show you the euro right here. There it is. There you can see there's the euro. It looks just like the bond. The bond lifted up and it fell down. The euro was trying to gain against the dollar there, and that's why we got all those red dots on the dollar index. The pressure has been on it. Problem is our algorithm won't confirm it. And even when the daily tried to confirm it, the weekly refused. It just refuses to confirm it. So, the best you can do is be neutral in those situations. Unless you're trading option derivatives like binaries and so forth, then you can always put a spread on, or put one of the binaries on solely because you have a limited risk and you have time. If you're not trading in if you do it over like a a 2-week or 4-week or 6-week period, then it's fine. All right, so from there, let's take a look at British pound. There's British pound right there. And you can see there, British pound is pressing down. We're in a bot. Let's put a green line. Where's the green lines? Still a green line there. There's the green line there. It jumped up. Now, with this news, they've driven it down again. It's very close. Minus 0.0034. So, I mean, it's not that far off trying to fight. There's 18. It's trying to get back up to the 0 line. We may even see it as we're just looking at it right now. There's 21. So, I mean, you're talking 4 digits out. 4 digits out. 5 digits out. There's 19. You can see it minus 19 now. There's minus 28. And, if they can get this thing popping a little bit, we'll see it straighten out there. All right, and so what else we got to say about any of that? I guess the next thing to do is let's go take a look at the Swiss. There is the Swiss. You can see the Swiss. Wow, it's tried. It got into the sell here. Let's steal one of these. Let's put one of these in. This one, it'll go like this. So we went into the sell for the one day, and then we just jumped right back into the buy again. Everybody back into the boat. That's what it comes out. I think we had a green dot, so I don't think we even had I think we had a green and a red there a couple of days ago. So that's why there's no line there. But we'll leave it there just because it's there. And so there's the Swiss. And you can see the long weekly run. That's why we're watching both algorithms all the time. So, and then from there, we'll go over to the yen. Yen is tangled up in there. I mean, they're pressing it there. Let's take a look at the yen's, the Nikkei. Let's see how the Nikkei is doing. Where is it? Nikkei. There it is. Let's put it up on the screen for you. So you can see there, they've been selling their currency and buying dollars. That's what happens when it's rising. It's buying dollars. So there's more yen to a dollar, which is not a good thing. Remember, that's inflationary. And so it takes, just like the poor Turkish lira, where it's like, 37 Turkish lira, where it used to be 1 Turkish lira. Not so far back. So then we'll go and look at here. There's the Nikkei. So with the new government, the stock market is holding pretty firm. But then again, the stock market is a good hedge for the inflation. Now you can see here we've been in a weekly sell for 3 weeks, and it's inching its way up. That's yesterday's close. Today, who knows, we might be even just a little bit more closer to the 0 line. Today's Wednesday. So we have a good 2.5 days, I guess you could say, to show us where this is going this week. Do they jump back into the weekly buy? Do they terrify us and run back up into the 160 area, 1.61 area? I don't know. We'll see. And then from there, we march over to the Turkish lira. Right there. It's been in that daily buy for 4 days. No, this is the 5th day now. But it hasn't really gone anywhere, and we're really happy about that. The less it goes, the better it is. It helps out the economy there in Turkey and the people. The whole idea. You can see it is going on a 6th week of a sell. We haven't seen 6 weeks in a sell in years. In like 3 years, we haven't seen 6 weeks in a sell. So that's pretty cool. The best we've had is we had a 5 week, then we had like a 4 week, and then we had like a 2 week and a 1 week or something like that, or it was like, and then another 1 week, I think it was. So we had like, I think we calculated over the last 104 weeks, 14 of them were in sells. So that's like 90 weeks in a buy out of 104. So I mean, it was like, wow. So the idea that now we're actually seeing a 6th week in a weekly sell, and it doesn't look like it's going to change any. We'll know more tomorrow. By the end of tomorrow, that'll really give us a good idea if we're going to, if there's a turn, or some type of action, and I don't think so. I really don't. I really think it's going to stay like this. All right. Let's hope it does. It helps out the people in Turkey more, that's for sure. And then there is, you can see it, we've been drawing these lines. That was the bigger one. I guess you could say like that. This was up on an upwardly projection. And now you can see this is trying to be on a downwardly projection. It's trying, but not doing too good a job. And that tells us about the gold. When we go and look at the South African Rand, it leads the metals complex. So let's go take a look at, there it is right there. Look at that. We've flirted. I think our high today now is $2,801.70. Another all-time high. Zoom. I know what I was looking for. I was wondering how the Yankees and the Dodgers did. Let me see where it is. Major League Baseball. I wanted to see what the Yankees won by. What did they win by? Oh, Yankees kicked it up. 11. They got 11 runs last night. So it's 3-1 now. The Yankees are behind. So today, let's see, what's today? The Dodgers, they're at the okay, so they're doing, so 2 and then 3. Okay, so they're playing the Yankees again tonight at Yankee Land in New York. So that'll be interesting. Game 6. No, Game 5. I'm sorry, Game 5. All right. So. I just wanted to see where the Yankees ended up. I would rather see the Dodgers win. But anyway, that's the way it goes. Now, let's go to silver. See what the silver's doing. There's a silver right there. You see a third day in a buy. It was really perking up even more for a while there. It got up to 34.69. Now the high of the last couple years is 35.07. So I was really excited last night when I saw that strength coming into it, but then it seemed to stall out. Okay. Let's see. Let's go to, what's next? Let's go over to copper. Now copper looked last night like it was trying to get going. I mean, it's been very tight. Look how tight it is all those days. And so I thought, wow, at one point they were flirting with the buy. Just being that high up was doing it. But you can see here now, it's rolled over just a little bit, and I guess they're losing their confidence. See, when I look at the price of copper, I just automatically assume they're losing the confidence of what do you call it? China. That's what it comes down to. When they don't, they don't, you don't see copper lifting. It means that they're losing their confidence. I said yesterday, and I think I hold to it. Wouldn't surprise me if they found a way to throw another another trillion yuan against their market to perk it up. Wouldn't surprise me at all. Yeah. Yes, indeed. Bang, 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 bang. Let me see from there. And that is the answer. Let me think. What else we got going on here? Let's go check out the canary. That is, woo! What happened there? Look at that. That's platinum. What a smackdown that is. How much is that down? That's down $24. Woof. Woof. Holding, look at it, and you can see minus 0.07. Still in the weekly buy though. But that could be a sign of the, they're selling silver, they're selling copper, they're selling platinum, and they're buying gold. So that's like the classic cross hedge going on again. And that's the Federal Reserve does that. No one else in their right mind would be doing it. Let's put it that way. With money, has to be government money doing it, because there's no way any broker. I mean, there's no way any money manager would be that foolish to do stuff like that. That's too much of a freak out, honestly. That is way too much of a freak out. Yep. All right. So from there, we'll go over to the energy sector. And let's see what the energy sector looks like. We're going to put West Texas up on the screen. Right there. And let's do this. We'll switch platforms again. There it is. And you can see it's pushing down. It's 3 days in a sell, 2 weeks in a sell. You know, it's feeling the pressure. There's no doubt about that. And what else can we say about any of that fun, exciting stuff? You know, I mean, with West Texas is trading at, is it $71? No, it's in the 60s. $68.61 with a low today of $67.28. So it's $1.32 off the lows. $1.32 off the lows. And then. Let me see who's next. Who is next here? Let's go check that out. That is. Let's check out Brent. And Brent looks basically always like the way West Texas is, and West Texas always looks the way Brent is. They both look always the same. Let's see. Bing, 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 bing. There it is. Nope, that's not. There it is right there. BZ. Yeah, it's trying to lift up too. Same way. It's is it 4 days or yeah, it's 4 days in a sell. You know, it's been in the sell since right there. That up day it went into the sell, and it's in a weekly sell, so it's been safe to be shorted since the 76 area, and we've gotten down as low as 70, 80 area, 70, 76, 70. It's at $5.20. So it's been a good drop and a good sell. It's been you know, a safe short. From there, we take a look at the heating oil. That's 3 weeks in a sell. It's the derivative off of all these products right there. And as you can see right there, you know, basically that's a minus, but it was a plus there, so you couldn't. But it's in a weekly sell for 3 weeks now. So it was in a sell for all this. It kept you out of that move there, and then you went back into the sell here, and it gave you a win the previous day, and now it's taking it away from you again. If you had a stop in there, that's fine. You may have made money. You may have not. It depends on your style of trading. If you do it in the options, it gave you a chance to get out. There's no doubt, because you know you got short in the $2.14 area, and it went down to $2.11 3/4. So it gave you room to make some money. From there, we shift over to, where do we go from there? Let's go take a look at natural gas. There it is right there, natural gas. Oh, did we get it or didn't we? There's the natural gas. Try that again. There we go. Here comes the natural gas. Whoa, look at that. Oh, they must have switched contracts. That's what that is. So I think what we need to do is, let's see, if maybe we can now start fixing that one. Let's see, we'll do it right in front of you, because some of you are using this platform, so you can always use the tutorial of it, doing it. So we go with natural gas. Let's find the symbol situation. Let's see, let's try. Let's do this. Move this out of the way. There we are. And let's look up the symbol. NG. January. Let's see if that'll work. Guess we spelled out natural gas Jan. See if it shows it. Nope. Doesn't want to do it that way. Well, let's go show you what we have on the other screen until I can figure this out. So let's not torture you more than you need to be tortured. And let's put it up on the screen there. Let's see if we can find it there. Right there, and right there. There we go. And there's natural gas. And you can see it opened up and sold it down. It's the third day in a sell. 4 weeks in a sell. This is the December contract at this point. That's what that is. I wonder if I could do it this way. Let me just try something here. What do we have here? Could it be as simple as that? Let's see what this does. Let's see. NG. Let's see what that does. Slide down more. Slide it down more. Okay, there it is. Let's try it this way. There it is. Okay, I think I got the symbol. Let's see if this will do it. Copy. And then I go over to here. Go to user. And you're looking at it on the old platform. Let's see if we can get it up on the new platform. These. Product. Add. Paste. There we are. Create. And then let's do this. Let's see if I can do this. I'm going to get rid of that. Okay, there it is. Go down and turn it on. Oh, we got to do users. That's it. That's what it is. Users. There we are. Let's do that. There we go. Now we'll go like that. And we'll see if we can see what it looks like. There we go. Look, now there is the old platform. Let's show you what the new platform is now that we got it put in right. See, it looks the same. Same situation. Let's just go like this. Let's see, let's grab a hold of it there. There you go. Just like that. Just like that. You see there's a solid 3 days. There we are again. Just move them around, that's all. Do the same thing with this one down below. Like that. Just move it over. And so you can see it. 4 weeks in a sell. Same situation as in the old platform. See the pressure's on there. That's what this system is. Not as much to do research as much as to follow live stuff. That's what it is. All right, and that is natural gas on the new beta platform. Looking identical to that. See? They look the same. It's the way it's supposed to be. All right, now from there, natural gas, let's jump over to, where do we jump over to? We jump over to see, so that's natural gas. We go from natural gas to, oh, the energy companies. Let's check it out. Let's see what. Let's see if we go like this. Scroll up, and let's take a look at. We've seen mostly everything except for that energy company down in Spain. So let's take a look at that. Let's see, where's it at? Was it EN? There it is, ENG, right there. Here we go. I just refreshed it. Okay, now what we'll do is we'll move it like this so you can see it much better, like so. Same thing with right there. You know, it's been in a weekly sell now, 6 weeks now in a sell, 6 weeks. And so you can see that pressure on it. You know, it's moving down. It's heading towards those lows, which means, hopefully, with my fingers crossed, that in Europe we see a lower price of energy costs. That's what we're hoping for. And then we seen the ExxonMobil yesterday. I guess, do we have that in there? I know we showed it before. The ExxonMobil here in the United States showing the same characteristics. So that's the energies of them all. Let's see if we did we put ExxonMobil in here? I would imagine we did. I know it. There it is, right there. ExxonMobil. And we'll give it a readjustment there. There we are. And you can see there, they tried to pop it yesterday with that nice little bounce going on. They gapped them down, and today, that's yesterday. I'm sorry, that's yesterday, and that's Monday. That's Friday. So you can see here they knocked it down into the sell. Did they do it? Let's see. It doesn't look like it too much. No, it's been in a buy for a couple of days, but it's in a weekly sell, so you can't be long either way. You only can be short. You know, it's been in a sell since last week. So on Friday, there was the Friday number right there. You came in for the gap down on the beta. And you can see here it's trying to lift up, but it's not. You can't be a long, that's for sure. And now, yesterday it closed back almost, because you can see here it's at 0.2008, well, 01, still in the plus. So today it may push itself back into that sell again. And so you could have taken your profits, or you could have rode it, either one. And either way, it's going the way of the dodo bird. And it's losing. That's what it's doing. All right. So from there, I guess two things could kick out. One is we can basically take a halftime break here for a second, come up with a title, and then go back to looking at the rest of the world or anything anybody would like to see. I'm always willing to look at all of it. So today's title, let's find today's title. Oh, that felt good. Let's see, today's title. There we are. Like that. There we are. Today's title. We started off talking about what? What did we start talking off about? We started off looking at the bonds and the interest rates again. We've been trapped in that unfortunate situation. And GDP, has been trying to tell us things like, it's not looking the way it's supposed to look. The Fed is getting trapped again, as usual. As a matter of fact, I think I posted something on Facebook where it has Mr. Powell in a Superman outfit, with the big red S on the chest and the uniform and the cape, and he has glowing eyes like he's evil. I think that's pretty much the whole story, and that's the truth. But what can we say that traders would understand? And that is basically that Fed cut does, let's see, and GDP don't match. So Fed cut and the GDP don't match. I guess that's what it comes down to. So in other words, if it was 1% or something like that, then it would be like, oh yeah, you got to cut rates. You got to do something to stimulate the economy. But if your GDP is up around 3%, there's no reason to be cutting interest rates. And when you really look at historic rates, that could have been the better title. Historic rates are just right. In other words, tomorrow, if the markets do something that allow us, I'll mention it that way because the historic rates look fine. 4%, 4.5% with inflation around 2.5%, 3%. I mean, it makes total sense. So in other words, why they're cutting rates or trying to adjust rates or twist rates means it's political because fundamentally, when you have 3% or 2.5% GDP, and you have inflation supposedly at 2.5, then 4% or 4.5% is normal. That's a normal rate, and that's why the bond vigilantes are holding matching it up. So that is the story right there, right now, right how. All right, now from there, let's jump over to the world markets themselves and take a look and see what they're doing this morning. So let's see. Let's start off with, you've seen the Nikkei. The Nikkei is still climbing. So from the Nikkei, let's see what the mother state or China. You see that a second day there. It's feeling the little pressure. You can see here it's trying to get into a weekly buy right there. That's yesterday's action. So we'll see. We got 2 more days. Do they close in a weekly buy? Do they bring on another, like we did the math yesterday, will they do another sugar high? In other words, about every 2 weeks or 3 weeks, maybe they'll, throw another trillion yuan into the marketplace. They need anywhere from 25 to 30 trillion to stimulate the economy, and they've only put in 1 trillion. So they need another, what it takes is about $5 trillion or basically 30 trillion yuan to get that stimulus really going right. So we'll watch and see. From there, let's jump over to, let's see what Hong Kong did. Hong Kong's been fascinating. It seems to be breaking away from mainland, which is a little surprising since they lean on poor mainland all the the island. Hong Kong seems to get leaned on. You can see there yesterday or last night they sold it down a little bit. See it pushed into the sell there. Now let's see how big. Let's see what this looks like. Full screen. Yeah, see it was right there. So it's yesterday. It's in that sell. And that's not showing us what today was. It's not reflecting that, I don't think. Let's see. There's the 28th. There's the 25th. No, so they're the 30th. That's it. There's the 30th. Okay, so they're reflecting. Oh, I see what is the. That's what it is. Let's do that again. So there is. Let's move that and refresh it. There we are. Let's see. That's the 27th, the 28th, and the 29th. All right, so then that must be the 25th right there. Yep, okay. So that is today, and they're driving it down. That's what they're doing, and they're going into the sell there. At the same time, Hong Kong is in a sell for the last 3 weeks. So not as bad, though. They've taken out these lows when it comes to the Shanghai. Let's go back to the Shanghai. And like I said, I'm waiting for a signal that they're going to lower more. No, actually not. Look at that. They didn't take out those lows either. So they're all holding together pretty well. That's not too bad. They're holding up. The only difference is you can see it's trying to get into the buy there. On the weekly. We'll see. I really think that they must have a plan. They just must. And I would assume the plan would be, to stretch it out. A couple trillion here. Every quarter, maybe 3 trillion a quarter or something like that. Does that they could have a I mentioned this yesterday. Communist countries usually do those 5-year plans and those 10-year plans, and so in other words, if they're doing a stimulus to the economy, it may be a 5-year stimulus plan. So you take 30 trillion basically, divide it by 5 years. It's 12 months. So that's what is that? 5 times 12 is 60. So you got to figure that maybe every couple months they'll drop. Maybe we'll see another drop going into November. Maybe they'll drop, another $1 trillion into the market, and that'll give it more energy. Maybe it'll learn something from stimulus. Keep on making people believe that the stimulus is going to work. All right. So from there, we shoot over to South Korea, see what they're doing there this morning. Where are you at? Let's see. Not there. I think it's near the Hong Kong one. There it is. Okay, so was it? There's the FTSE, and there's the. Okay, now we see where it's at. So you can see, like right there, this is the South Korean index. And it's been kind of holding steady, looking the same way. Maybe they know something we don't know, like another stimulus is coming around the corner. And that's what I'm saying here is let's keep an eye out for it. It might happen. That'll put another sugar high into the marketplace across the whole planet, because it'll affect everybody everywhere. And then from there, we go take a look at Taiwan. Right there. Let's give it a refresh again. There's Taiwan. It's kind of topped out the last 3 weeks. You can see here it's been in a daily sell now for, what is that, 9 days now. Daily sell, 9 days in a sell. That should be the 27th, right, and that's going to be the 24th. Yeah, so it's been 9 days now in a sell, and we're sliding into the weekly now as we speak. Maybe it'll bring it down a little bit. I mean, obviously this the sugar high has had an effect everywhere on the financial markets. And then from there we jump over to, let's see, what do we got here? So let's look at Singapore. There it is right there. And there is the Singapore numbers. They sold it down a little bit. Chart size. Let's shrink it down a little bit chart size wise. There we are. See a lot of pressure, a lot of red. Same situation. 6 out of the last 7 days in a sell, and the last 2 weeks in a sell. So it's been telling us that they want to take a little profits after that big sugar high. Sugar. And then from there, push that, and we'll take a look at Jakarta. See what Jakarta's up to. It's got its label on there, so we can just go bada bing right there. Jakarta Stock Exchange, Indonesia. There we are. Yep. That's 5 days in a sell. The weekly is trying to pierce into it as we speak. So it's told you from basically right there, don't be long, be neutral. Because we're in a weekly buy and a daily sell since last week. So, and they're I guess the oil nation of the Pacific at this point. And then let's take a look at the Nifty 50 right there. Nifty 50. Now that the brick, stuff is over with, maybe I think it got sold down because of the brick situation. Right now, it really challenges a country to be part of the BRICS. Let me explain what I'm thinking, and this is what I've been thinking for years now. It's not easy to be a BRIC. You've got China, it's a leading communist nation. So you're not, you don't do real well. We used to call it the cockroach hotel. Not China, China too, but and what that means basically is when you invest in a place that you can put your money in, but it's hard to get out. We always call that the cockroach hotel because it's a device that kills cockroaches. They can get in, but they can't get out. And so we've always been worried about China because it's always been easy to invest in it. It's been very hard to get your assets out of it. You have to take them in goods, so you gotta convert them. It's really hard there. And so you can see what happened with Saudi Arabia. Saudi Arabia bought or sold. What did it do? It sold oil to China directly at the beginning of this year, and they paid them in gold. And what they did is they took that gold. Saudi Arabia took the gold that China. They didn't take yuan. Well, maybe what they did is they sold it to them in yuan, converted the yuan into gold in Shanghai within one day. And so they weren't willing to hold on to the Chinese yuan. And then they converted it into gold and shipped it out of the country back to Saudi Arabia. So in essence, the Chinese ended up buying buying oil with gold. That's not what they wanted. They want their currency. They want their paper to be the convert, not the gold. They promised gold. They tried to convince people to trust them. And they kept on saying, you'll be able to convert. So they showed the Saudis, see, you can convert. They did. They converted it in 24 hours and off it went. How many years have I said that's what people are going to do until they really see the value in holding the currency? So you fast forward to now. And with the BRICS in general, China and the rest of the BRICS. So what happens is that as much as they created a banknote, and I haven't even seen the information on that banknote, like explaining what it is and how it exercises and what's backing it, all that stuff. Okay, so at this point, that is really where we stand with the Chinese yuan, and that is that it's not exactly, we don't see any more China deals where they're buying or they're selling oil and taking in Chinese yuan. Instead, we see, that same situation where it gets converted into gold almost instantly and shipped out of the country. Not what the BRICS want. That's not what the BRICS want. Trust me. They want you to buy with their BRIC note or their currency, and you hold on to the currency. And that's what they're waiting for. And that's where we stand, I guess you could say, at this moment in time. So, what else can we say? I guess that's about it. And then from there, let's see. I guess we'll go to. That's what this is all about, the BRIC. So the idea is that the Nifty 50 now is seated comfortably inside the BRIC. They took off a couple thousand points off of the stock indice. We'll see if it bounces back up. I would think it would, but I have to read more about what they negotiated. So they didn't exactly tell us everything they did. They just, Putin came out, he hosted it in Moscow and said, hey, here we got a BRIC note. I got to still see what the conversion is. Is it a conversion of like 5 or 6 currencies and gold or what? And that's what the issue is all about really right now. We're not really sure what the conversion and how it works, but we'll figure it out over time. We will get that figured out. But I think that's the answer to why we're seeing the pressure on that pressure. I think that's literally what it comes down to. And so we'll keep on, watching and seeing, and before we know, it'll all play out the right way, And that is the name of the game there. Just watching how it plays out. And so that's why I think we're seeing the Nifty 50 drift down. I think that's what it really comes down to at this point. All right, now from there, let's jump across the. Let's go see Saudi Arabia this morning. And there is, where is it at? Saudi. Where is Saudi Arabia? Saudi. It's in here. There it is, Saudi Arabia. And there is the Aramco. And you can see Aramco is looking pretty firm. What's that, 5 days now in a buy? Even with oil dropping down, you can see it's in a weekly sell. And again, like I said, it's like 4 or 5 weeks in a weekly sell. Let's see if we can get this better. Right there, is that a minus? That's definitely a minus. So basically, it's like 6 weeks in a sell at this point. And you can see it's been a lot of days in the sell there. There's 3 weeks right up in there, and you can see, up in this area here, what's the date there? Let's see, September 27th. So this week in here, somewhere's in here, we went into the weekly sell, and it's kind of going nowhere, which is not bad, I mean, Aramco, has a lot of profit to it, so that's half the reason right there. And let me think, what else do we have going on there? Let's see. Let's go to the metals company and see how they're doing. It's nice to have 2 different companies in Saudi Arabia that we can look at. We like that. We want to see markets trade free. They teach us and tell us stories, real stories that mean something, And there it is right there. There is the national metal manufacturer in Saudi Arabia. Let's see. So there is that. There we are. And so there is that doing the same thing, holding up firm in a buy, a couple of weeks in a sell, no major pressure there. It's been going down, but it's locked pretty comfortably. Can't complain about that. Let's take a look at the FTSE and the DAX and check out that. Let's see, where's it at? There's the FTSE. FTSE was feeling pressure yesterday. It's feeling it again today. You can see it's another day down. It's in a weekly sell for a couple weeks. Let's see what the DAX looks like. DAX. There it is right there. DAX feeling that same pain. Something like, 5 days in a sell out of the last 7. It's going into a weekly sell, feeling some of the pressure. Stock markets are down. This last week was kind of a tough week for them. So that does not surprise me too much. And let's see. What else is there? Let's take a look at, and we'll get out of here because the market's open up in 5 minutes. Let's take a look at, what else do we look at? Let's look at Brussels. So we have Brussels on there. Let's see what they're doing. Due to the fact that the capital is in Brussels, it's always worth paying attention to, at least in my head. Just thinking politicians front-running stuff, that type of thing. You can see here 2 weeks in a sell. So a little pressure more there. Yeah, kind of trapped sideways, but overall, look at it. It's been climbing more than it's been failing. It's been going up. We were in buys for weeks. So, we'll see how Europe treats itself. But what we can say is this, is that we're going to try to have to do more investigation about that new brick note and see what the conversion is and see if it's a good arbitrage. See, that's what traders do. And they're welcome to be part of the world market as far as I'm concerned. Let them be. It's just all part of the game, honestly. So, all right, this is Doc from North America. We'll catch you all tomorrow, same time, same channel. So, Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Have a safe and smart trading day. Ta-ta for now.